Good evening, ladies and gentlemen. Welcome to Tech Talk, organized by NUS Alumni Relations. We will be starting shortly. In the meantime, please note the following. For security and personal data protection purposes, participants' videos and audios are disabled. Please post any question you may have in the Q&A window. Your question will then be reviewed by the moderator and may be grouped with similar questions to be answered. If you require any technical assistance, please message the administrator via the chat function. This session will be recorded and will be made available on NUS Alumni Relations' website after next week. NUS Alumni Relations and its event partners may use some or all of these images and videos in their publications, digital platforms, and/or marketing channels. This evening, we are pleased to have with us Mr. Victor Liu, co-founder and CTO of Xverse, to share his insights on the topic, the future of money, decentralized finance. Victor is the co-founder of Xverse, a Singapore-based payment company that recently launched the XSGD stablecoin that hit $1 billion in transaction volume in just 4 months. At Xverse, Victor manages the entire engineering team, which handles different product lines ranging from security, hardware, data, blockchain, to mobile and web application development. So now, without further ado, I would like to pass the time over to Victor.
Okay, thank you, Royston. Okay, good evening, everyone. My name is Victor. I'm graduated from NUS 2012. So I majored in computer science back when I was studying at NUS 2012. Today, we're going to talk to you about the future of money. And to me, the future of money is decentralized finance, otherwise known as DeFi. So today, I'll share with you a little bit on what DeFi is about, why am I excited about it, and some of the technologies behind decentralized finance. The topic of DeFi and the blockchain is actually a very, very long, in-depth study. I think some universities probably offer it in 2-part modules. But today, I'm just trying to breeze through all of this concept so that you guys can take home something and actually be able to apply it on your daily life immediately if you so choose to. Okay. So to understand decentralized finance, first, we go back to the basics. Right. So decentralized finance are actually applications built on a blockchain. So, but before that, we need to understand what exactly is the blockchain. So here are some characteristics. The texts are a bit small, but I summarize it on the right for you guys to see. So the first characteristics is there's no central authority required to approve access to the data on the blockchain. Right? What that means is that anyone with an internet connection, a computer, can have access to the underlying data. So contrast this with you trying to access UOB bank data. Or you look at Facebook, you want to say, hey, no Facebook, please give me access to your database. That's definitely not possible, right? However, any data on the blockchain is by definition open. Anyone with internet connection can simply go to the Ledger browser and go and look through all the data that's been stored there and browse through and do some analysis they wish to. Okay. The next part of what a blockchain is that all data on it is immutable. So immutable basically means the moment you commit some data or some code on the blockchain, you cannot change it after that. Right? It's not like a traditional database. If you upload a value, you realize it's wrong, and you can change it. Right? It's just like an Excel sheet. If you key in a wrong value, it's okay. Just delete it, edit it, etc. But on the blockchain, that's not possible. The moment a single data is committed on the blockchain, you cannot change it, and that's what immutability means. Okay, so this immutability concept also gives rise to why people trust it. The moment the data is there, it cannot be refuted because the code is built in such a way that no one can change it after that. The next, blockchain settlement is really fast. And if you compare it with Swift transfer, I don't know how many of you guys have done a Swift network transfer, transferring TT from Singapore to the US, for example. It takes weeks, it's not sometimes half a month. Okay, and you don't know where the money goes to even. It's very accurate and it's efficient by property of the latest technology and a P2P research that we've done over the past 10 years. So here are some key characteristics of what a blockchain is. I guess every one of you probably heard of this thing known as Bitcoin. Bitcoin is one implementation of the blockchain, and it's the very first one that gained widespread popularity. Before that, there's many other similar protocols, but Bitcoin is one of the most famous and most successful ones. Along with it came Ethereum. So today I'm going to talk a little bit and contrast a bit on Bitcoin and Ethereum because it's probably what most people have heard of and understand. So let's compare between Bitcoin and Ethereum. So first, you need to understand that Bitcoin is a cryptocurrency, while Ethereum is not just a cryptocurrency. It's a cryptocurrency plus a platform by which transactions can be executed on it. What that means is that you can actually deploy application code, just like how you deploy a code onto a server to run your application. The Ethereum platform can actually execute code on the blockchain itself. Ethereum network transactions are way faster because it's a newer technology. It's also meant to execute code rather than just transferring of value. Bitcoin, however, focuses primarily as a storage of value. It can only store 1 Bitcoin, 2 Bitcoin as a unit of amount in your Bitcoin blockchain wallet. And it's meant to store value, exchange value. But Ethereum is not just that. Ethereum can do more than that. Right. In Ethereum, you have the Ethereum token itself. You can use it as a store of value and a medium of exchange. But on top of that, Ethereum, you can also execute code that Bitcoin could not. So some people might kind of think, hey, is Ethereum meant to replace Bitcoin? Probably if you Google Bitcoin versus Ethereum, some articles might kind of mention that it's meant to replace it. But in my opinion, it's not. It's complementary blockchain technologies. And as you do more of your own research, you realize that besides Bitcoin and Ethereum, actually a lot more blockchains out there. Right? So much so that I think I can't really keep track. There's probably around at least 20 popular ones that's out there in the market, right? So all this blockchain, the way I see it, you're going to see a future where the blockchains complement one another rather than compete against one another. So that's my personal view. So Ethereum is where we want to place our focus on, right? If we want to talk about decentralized finance, because Bitcoin is unable to execute code on it, so it's very limited in nature. So if you want to talk about decentralized finance, what that means is application built on blockchain, and Ethereum itself as a platform, allows what we call smart contracts running on it. Smart contracts are basically code written, that the blockchain can execute. So you can think of it, smart contracts, code, they are used interchangeably. Hence, I put the quote unquote smart contracts, it's the same. So Ethereum actually helps you to push code. Once it's pushed there, you cannot change it, and then you can execute on it. Okay. So you can see here, bottom 3 figures is written as code. This is a summary. When an event happens, the code executes and run it and give you results, and you can take the results from the blockchain itself. It's open by nature, as I mentioned. All blockchain properties has a similar property known as open access. There are some blockchains, of course, is closed, but all the popular ones right now is fully open. So if anyone, including regulators, can watch the contract activities, and figure out what is happening. However, the person executing it is anonymous because you do not know who exactly owns a wallet to execute code on the blockchain. So next, we're going to talk a little bit about tokens, right? So when you talk about smart contracts, you talk about blockchains, a corresponding topic that most people would mention about is tokens. Okay, so here are 2 most popular ones, ERC20 token and ERC721 token. Okay. So first of all, this concept of token might be a bit confusing, but let me try to explain a bit more. So as I mentioned, Bitcoin has only 1 token on it, which is Bitcoin. Right? So it's a blockchain, there's a token on it, you can use it to exchange token with one another, or even hold token in your own Bitcoin wallet. Ethereum is the same. You can hold an Ethereum token in your own wallet. You can transfer tokens around. But because Ethereum has a smart contract property, it can produce other tokens as well. So for example, Xverse, which is my company that I started, we launched an ERC20 token called the XSGD token. So an XSGD token is basically a 1-to-1 peg to the Singapore fiat currency. So today, if you mint 1 XSGD token and you store in your crypto wallet, 5 years down the road, you want to change it back into Singapore dollars and deposit it into your POSB bank, you can also use our platform to swap the XSGD back into 1 XSGD token. There are millions of tokens out there in the Ethereum platform. XSGD is one of them. But what I'm trying to say is that smart contract allows digital assets to be created. So it's not just Ethereum tokens. There's many, many other tokens. Unlike Bitcoin, right? There's only 1 token on the Bitcoin platform. So ERC721 token, you can see this little guy here is known as the CryptoPunk token. It's also known as an NFT. So meaning that each token by itself is unique, there's a unique signature to it. So what many people do is that they actually mint an ERC-721 tokens and then link it with an artwork so that we can certify that this artwork is one and the only kind and is only owned by one user. And because of that, a lot of artists has been launching their artwork, and selling online, and it's been pretty popular. So you can see this little guy here at the bottom left. It's sold for 11 million US dollars. So you can go and Google there, CryptoPunk, figure out about an NFT. Why this little guy? It's just a JPEG, right? Why is it being sold for $11 million? I wouldn't go too much into that because it's not the focus on this talk. But you can see, these are some interesting use cases that people are using. Okay, next. So, what exactly is DeFi? Again, I want to repeat myself. Ethereum platform serves as a network for you to run code on it, right? You need not just run financial applications. You can run any kind of applications on it, gaming applications, social applications, you name it. But DeFi is a specific term used to classify apps that are built on a blockchain that is servicing the financial services sector. Okay. And it's a movement aimed at making financial system open to everyone, and it doesn't require a centralized authority, such as a bank. This is only possible now because of the widespread adoption and advancement in smart contract and blockchain technologies. And the way you think about this is that all these smart contracts are known as precision code. They are actually the database that stores the ledger. And the blockchain technology is actually the server running it. And together, you have the server and database running together concurrently, and then from there, you can actually build any kind of application you can dream of. So DeFi projects are composed of mostly smart contracts. Later, I will show you guys what exactly is a smart contract, since I've been talking a lot about smart contracts in my talk. Right. This smart contract are hosted on a blockchain. Again, I will show you what it means by hosting on it. And all of it can be programmed with a programming language. I think some of you here, if you have any programming knowledge, you might have experienced Excel, VBA programming, or macro programming. And in Ethereum, the programming language is called Solidity. Okay, so you can, if you know Solidity, you can write your own code, host it on a blockchain, and anyone can use it. So Ethereum is the most popular one because it has the most amount of developers worldwide. And right now, there's a lot of developers launching decentralized finance applications on it. And every day, there's a lot of newcomers joining in and locking money into that smart contract that will generate financial returns, which I will talk a little bit more at the end of my slide as I go through some of the examples application. Okay. So here's some sample apps. Decentralized finance, basically you can see here, whatever the traditional finance industry can provide, decentralized finance can provide as well. Insurance, lending, your currency, stablecoins, otherwise known as stablecoins, your exchanges, your derivatives, your margin trading, anything you can think of. Actually, most of the centralized finance or traditional finance is actually structured from all these small components that you see in this screen. Okay, so we talk about savings product, is actually under the stablecoin and lending borrowing part. We talk about structured finance, it's basically a derivatives part. Exchanges and margin trading goes together hand in hand, insurance. So you can see a lot of things are happening on the traditional finance world. We can also do it on the DeFi world. Okay, so I talked a lot about smart contracts. So let's do a little bit deep dive on what a smart contract is. So I screenshot this particular smart contract on this website, from this website called Etherscan. And you can see here at the bottom right of the screen, there's a code here. You can see contract source code. You can see from line 94 to line 105. You guys know programming, there's actually a function call. So it's actually a piece of code that does some calculation. So this file is very, very long. It's probably a few hundred lines of code. This is also known as a smart contract, right? Actually, to me, it's just a fancy tool word, just a text file with lots of programming code written on it. And together, you compose all these smart contracts together into an application. Okay, so you can see here, this contract is deployed onto this extra address here, 0x1f98 on the top left of the screen. Right. So basically, this is what I'm trying to tell you is that this smart contract is residing on a blockchain, And if you want to visit this blockchain, you can screenshot this Zoom meeting I have, key in the address above, and you would be redirected to the source code, from where this screenshot is being taken. Okay. So you can see here, the code controls execution, and every transaction, you can see there's a tab here for transactions. Every transaction that is executed on this smart contract is trackable, and it cannot be reversed. Okay, so again, back to my very first slide on the properties of blockchain. Anything that's deployed on blockchain is final, is immutable, cannot change it. Right, and therefore it gives rise to trust, because anyone that tries to change the data will be rejected from the blockchain itself, and all transactions are being logged. Right, you cannot say that, hey, this thing happened. No, I did not know of it. There's no such thing in the blockchain world. Everything is recorded, and you cannot change it after that, including the code. So as a programmer, if I deploy a code there's a bug in it, I have to deploy a new set of code. I cannot just go back and change a line, right? For example, if line 102 is wrong, I say, oh, there's an error there, right? There's a bug. There's nothing I can do about it, literally. I have to redeploy the whole thing, right? And then ask my users to not use the code deployed onto this address and use another address instead. So if you guys are still confused about what smart contract is, once again, you can think of smart contract as APIs. So you can see on the top left, I took a screenshot of what a smart contract is. It has 8 functions: approve, delegate, mint, permit, set minter, transfer. These are all the functions that you can call on a smart contract. Similarly, if you look at Stripe or PayPal, they expose APIs that you can use to call. APIs, also known as application programming interface, is a term used by engineers to communicate with the servers. So in this case, you're communicating to Stripe servers, or let's say Facebook has a server and they expose server APIs to download a list of your friends. We can post to a Facebook API server to get a list of your friends, right? So smart contract is the same, right? You can see here there's 8 functions called. You can actually send a message to a smart contract itself. Hey, I want to mint 500 tokens, for example, in function call number 4. So there's a mint function, right? And you can think of it as something similar, right? It's just that you're calling a blockchain versus calling a centralized server. Okay, so smart contract is the same as API, basically. Yeah. So hopefully this will help someone to visualize what exactly is smart contract and how does it look like in the non-blockchain world. Here's a quick summary of what I learned so far. I'd like to recap what I've mentioned so that it's easier for people to digest. There exist some blockchain platforms that can execute smart contracts. Not all blockchains can do that. The ones that can do that, for example, is the Ethereum, Zilliqa, just to name a few. You can Google for more blockchains that can do the same. I mentioned Zilliqa is because it's a project that is done and launched by the NUS alumni. It's a NUS research team, and it's also based in Singapore. Yeah, so they actually is a NUS team that launched the Zilliqa blockchain, and it has the property that it can execute smart contracts. Whatever Ethereum can do, Zilliqa can do as well. Yeah. So applications can be built on this platform, and the applications that is being launched on this platform is also known as smart contracts. And since these platforms are built on blockchain, and by the property of what a blockchain implies, this means that anyone can freely access it, anyone can freely interact with it. Okay, and hence any blockchain application that's built on top of it that's focusing on the financial world, also known as decentralized finance. Of course, you need not build financial applications, right? You can build any kind of financial applications you want. Right now, you can see artwork being sold for $11 million and more. There's a lot of artwork being sold on the blockchain. These are like, for example, the arts industry. We can also have games built on the blockchain industries. For example, Axis. You can Google that Axis game. And also even social websites, right? So there are a lot of talks of Facebook restricting or like keeping your data private to the company, right? So in the blockchain world, people are trying to build social applications on the blockchain such that it's not just owned by one centralized authority, but it's owned by everyone. It's freely available on the blockchain itself. There's no one person who can claim ownership of all the data on it. So because of decentralized finance, we actually paved the way to open banking. and open access to all these interesting financial services. So the concept of open banking refers to freely accessible banking services for everyone. We think about it in a moment. Current access to banking infrastructure is highly regulated by incumbents and centralized authority. One way to think about this is that, hey, I want to get access to the Swift network. I want to start a new company. I want to access to the Swift network so that, I can do TT transmission from US to Singapore, or even Singapore to Thailand. How would you even go about doing that? You need to go through, you need to figure out who to call, you need to figure out who knows someone in a Swift company, or even need to find out who is a sponsoring bank who can sponsor your Swift network setup. And even before that, you also need to figure out, who do you call and pull some strings to get into that network itself. It's not very open, right? You think about it that way. And by the time you reach that stage, you realize that, hey, there's a setup fee, there's a connection fee, there's a lot more fees, there's regulatory fees, and the whole setup might take you, I don't know, before you even do anything, it's probably going to cost you a few $1 million and a year of negotiation. So that's why I can see in my last sentence, access to banking service is not freely available to anyone and everyone. What I quoted as example is an enterprise example. There are also examples on the retail level. For example, in certain countries, certain minorities are being excluded from having several opening bank account, for example. Minorities are also being ostracized. They may not be able to access credit. For example, certain areas I know, due to your race, etc., the banks might not want to offer you a credit line, or even if they offer you a credit line, the interest rate is very high, right? So there's some kind of like filtering mechanism done by the centralized authority. And just on a personal anecdote, I have a US bank account, and because I haven't been to the US for more than 2 years, they decided to unilaterally confiscated my money there. So I cannot access to it. I cannot fly to the US because of COVID, etc. And yeah, my money is now gone, right? So this is what I mean, right? It's really not, you think that it's open, but actually it's not. So I think in Singapore, we're pretty lucky because we have financial access, right? Everyone is banked. Almost everyone in Singapore has a bank account. But this is not so in, let's say, Indonesia, right? Almost 60% of the population in Indonesia doesn't have a bank account. So this is something that I think over here in Singapore, not many people know, but actually in other parts of the world, banking services are actually not freely accessible. So this technology, I think, will be more appreciated by people from other regions and maybe other parts of the world. But thankfully, Singapore, we're quite lucky. Everyone, is able to open a bank account, right? No one will just reject you, say, hey, you can open a DBS bank account or UB bank account. There's no such thing. How I think the future should look like. Okay, so CFI is not what I call centralized finance. DeFi means decentralized finance. So we can see here the contrast on we look at the left-hand side first. You can see here permissionless, open, censorship resistance, cheaper, built on blockchain. By censorship resistance, what I mean is that if you speak badly about someone and that someone decides to sue you, the bank might choose not to work with you because they might classify you as someone who is high risk. Right. Open basically means that anyone can connect to the blockchain and build applications on it, right? But correspondingly, if it's closed, you need to seek approval, pull some strings, pay money to access it, etc. So you can see here, the property of DeFi and CeFi. You can see the contrast. And then on the right, you can see on the architecture side how it looks like. So this one, the right side is more for people who are a bit more tech savvy. You can see here the devices, you connect to the internet and then connect to the server. One example is maybe PayNow, right? You have your mobile phone, you turn on your PayNow app, and you connect to the PayNow server to do some transactions. Right? After that, you can see the after part. This doesn't work the same if you talk about the Ethereum network. There's no such thing as a central server that you interact with on the Ethereum network. You broadcast the transactions, and simultaneously, all databases, all servers will receive your message, and you get processed. So that's the main difference on the tech side. So for decentralized application to work, you need tokens, that will represent ownership that represents transfer of a certain value. And stablecoin is part of a unique currency that enables decentralized finance to operate. So what exactly is stablecoin? One example I like to use is in PayLah, you have a SGD fiat that can transfer money to one another, or you can use the fast network. So you turn on your PayLah app, you key in someone's phone number, you send $10, right? And then someone on the opposing side will turn on their PayLah app, you can see $10 in their PayLah wallet. So how do you do something similar, right? You want to send SGD on the Ethereum network. So before Express came and launched XGD, this wasn't possible. So in the blockchain world, if you want to send someone money, back then, the only stablecoin that existed in the market was the US dollar stablecoin, otherwise known as USDT. Recently, there was not too long after that, there's also USDC and then DAI stablecoin. So sending money between one another using US dollars is fairly easy back then. But I'm a Singaporean, right? And I'm a Singaporean company, so we figure out, hey, people would like to use SGD, right? So why isn't there an SGD on the Ethereum network? So here we are, we build the XGD and then we launch it on the Ethereum network, and we maintain a one-to-one pack between XGD and SGD. So if you are actually building applications on the blockchain itself, and you want to collect Singapore dollars, you can actually use XGD. However, if you do not want to use Singapore dollars, you can even choose to use US dollars or even Euro dollars on the Ethereum network itself. So the interesting concept here to note is that with stablecoin, and if you're actually a developer, you have an intention to build your own company in the future, your time to market is actually a lot faster. One way to visualize this is, suppose right now you're Singaporean, you have a Singapore company and you want to launch in the US. You build a very cool fintech app. You think that it's going to be a killer app, everyone's going to use it. So how do you going to launch in the US, right? So one, I need to travel there. Number two, I need to figure out how to incorporate in the US. I need to figure out who are the authorities to talk to before I can launch this app. And I need to maybe apply, several licenses that's applicable to my fintech app. And by the time I do that, I realize it's probably going to be 2 years and $1 million spent. However, if you build a financial app on the blockchain and you accept US dollar coins or even Singapore dollar coin on the Ethereum blockchain, it's live from day one. And the good thing about this is that it's live on day one and it's live for the whole world. Right? So today, if you build an application in Singapore and launch it, most people will only think of, hey, I'm launching this for the Singapore market. But on the blockchain itself is different. On the blockchain world, the moment you launch something on the blockchain, immediately it's available and accessible to anyone in the whole world. Right? There's no need to apply for access. You do not need to ask permission for anyone. Right? So that's why I can see in my last part, you can use stablecoin to build your own financial apps without having to seek permission from any central authority, and hence the rate of innovation is drastically improved. And we can actually see a lot more apps being built in this past 1 year actually, because the moment you build it, it's on the blockchain, it's open to everyone. People are freely copying one another and launching new apps without fearing, whether I need to apply for licenses, ask for permissions here and there, So in this way, actually, innovation actually thrives and is a compounding effect. So if you look at the traditional finance and what DeFi are bringing about, you can see I do a little comparison here. The old way, Wells Fargo is actually a bank in America. It's similar to your DBS bank, actually. Wells Fargo is the same as DBS bank. So whatever you see, Wells Fargo, so you just replace it with DBS bank. So previously, you have a bank, you want a credit card, you have a savings account. How we do it in the blockchain world is actually via MetaMask, Argon, Nexo, Compound, Aave. For example, ever since the bank in the US, they confiscated my money, I immediately moved all my funds and converted it into US dollar coin and store it on Nexo, for example. So now my bank account is actually residing on the ledger itself. I no longer have a US bank account. Right? I just store everything on the blockchain. And the cool part of blockchain is that there's no one person, there's no compliance figurehead or a bank fund manager decided that, hey, this guy is in Singapore, he's no longer in the US, we should just take his money. There's no such thing in the blockchain world. Okay, so we can get loans here. You can even invest in mutual funds. For example, you can see starts in the DeFi world. All these terms you can just Google and find out more, right? Venmo, you can see here, is equivalent known as PayPal in the US. So there's a lot of equivalent happening in the blockchain world. And in fact, if this trend continues, you're going to see a future in 5-10 years time where actually decentralized finance is going to take over all the centralized finance, simply because the rate of innovation and iteration is way faster. So here's a sample application, Aave, you can see here. In the second line, I wrote there compound Aave Nexo. I took a screenshot from Aave. Currently, it has $23 billion locked into this protocol, meaning $23 billion US has been residing the smart contract here. And the way you use it is, one, you can deposit money and they'll pay you interest. Number two, you can borrow money from it and you pay an interest. So over here, you can see my red arrow. For example, if you want to deposit US dollars, if you deposit GUSD, which is Gemini US dollars, you will get an annual interest of 6.41%. As of screenshot, yeah, this value changes every 1 to 5 minutes, yeah. And if you borrow from it, you pay 8.8%. So this is slightly better than let's say borrowing from a local bank that might charge you 30%, and in Indonesia they will even charge you 20% just to borrow money. Right. So for example, if I'm in Indonesia and I want to borrow money, I think I would rather borrow money from Aave, right? Because it's just cheaper, 8.8% versus Indonesia rate of like 20-30%. And in Indonesia, the interest rate is very low. If I store money with an Indonesia bank, they're only giving me a 0.00001% interest rate a year. Comparing it with this DeFi app that I'm using is giving me a 6.41%. Okay, so this is one sample decentralized financial application. There's other applications also. You can even buy Microsoft stocks, you can buy Alibaba stocks, you can buy Amazon stocks, even QQQ, your ETF, right? Anything you can dream of, structured products, is all available on the blockchain as well. So whatever you dream of in the CeFi world, the DeFi world will have it as well. Okay, so this is the end of my introduction on DeFi and the future of money. And yeah, I think next we're going to talk a little bit on any questions that you guys have.
All right, thank you, Mr. Liu. So at this point, we would now like to invite Mr. Lo Wei-Ren, manager at NUS Overseas College, to moderate the Q&A session. So please continue to post your questions in the Q&A window, and upvote as well any of the questions that you see within the Q&A function that you would like answered as well. So Wei-Ren, please.
All right, thank you, Royston, and thank you, Victor, for the very insightful sharing. You have definitely engaged our audience, and we have a slew of questions that is waiting for your answers. So I'm just going to go down the list of questions that has been upvoted and hear from you on some of them. So the first question that came in very early into the conversation is about the record that you talk about. So you said that in cryptocurrency, the records are immutable. So how do we correct mistakes? So if there's an error that occurs, how is it being corrected?
Okay, that's a good question, and it's actually quite a techy question actually. So if anyone here is a software engineer, the term that we use here is known as event sourcing. So you can Google, event sourcing. But otherwise, if you made a mistake on a blockchain, so let's say this person, he's not supposed to receive $10, but accidentally credit $10 to this person. To correct a mistake, I cannot set the $10 to 0. What I need to do is I push another transactions that will negate that initial $10. For example, there's a +10, right, in a person's wallet. Then I realize that, oh shit, I made a mistake. So I need to push a new record, which is a -10. So the initial mistake, which is +10, plus the -10, which I push out, total is 0. In that way, I cannot hide my mistake, right? So obviously I screw up, I say sorry, I push a -10. So this is why I say there's a trust, because if you make a mistake, the mistake is public, it needs to be acknowledged. I cannot secretly go to the database and change the value to 0 and pretend that nothing has ever happened, right? So that's why people trust the blockchain. And I mean, there's a pros and cons lah. I mean, the cons is if you make a mistake, it's actually costly to correct the mistake. But the pros here is that you gain a trust. You cannot just hide your mistake. You need to openly set a new event and say, hey, guys, I screwed up, and here's the correction. Yeah, so hopefully that answered the question.
Yeah, it totally did, and sounds like quite a lot of work. All right, more questions coming in, and this is regarding a lot of the conversation around cryptocurrency, actually. So the question was that authorities are concerned about decentralized finance because it's relatively easy for money laundering or scams or fraud to happen on the platform. So how do you think decentralized finance can minimize this? Or can it be even used to perform better than the current existing financial model and systems?
Okay, so to answer this question, first we need to look at how a money travels, right? So before you can put in money into a DeFi world, it needs to come from somewhere, right? It needs to come from your bank account, actually. So today, if you want to buy Bitcoin, how? Right? You need to go to your PSB bank, do a wire transfer to, let's say, a crypto company, get Bitcoin, get Ethereum, or get US dollar tokens, etc., and then you put it in DeFi, right? So there's actually a trail that one can follow, right? As I mentioned, the blockchain data, the moment it's accessed, is open. And how would you actually take the money out from the DeFi ecosystem and use it, in your daily life, right? So the answer, what I'm trying to allude to is before you put in money into the crypto blockchain world, there needs to be certain regulations and certain KYC in place to figure out who actually put the money in. And when you take out the money, if it's a large amount, the crypto exchange and the network itself would have to do their own due diligence. And hey, why is the sudden influx of so much money coming out? Where is it coming from? And in fact, the DeFi world, because of all the ledgers, all the data is pretty open to everyone. You can actually do data analysis on it, to do clustering, to figure out, hey, where is money moving towards to? Right, so people might try to mask it, but with enough data, you can actually do machine learning on the transactions, and you can see patterns on it, and kind of figure out, hey, these few wallets are always engaged in fraudulent activities, and hence you can block it. Yeah. So hopefully that answers the question. You would basically regulate the input, the entry point, and the exit point. Right, and whatever happens in DeFi world is where the innovation happens, right? Because it's really open, and we do not want to put too much regulations there, that will stifle innovation. But we control that. We try to control the input and output from where the money comes from in the DeFi world, and correspondingly taking money out from the DeFi world.
All right, thank you. That was a very detailed answer. And before we continue to the next question, right? Can I kindly request for you to stop sharing screen so that we can look at you when you're answering the questions?
Oh, okay.
Perfect. All right. On to the next question. So the next question is really about the backing of the XSGD stablecoin. The question came from similar observation in USA, because apparently in USA there's been crackdown on USDC and USDT because they are claimed to be one-to-one pegging, one-to-one backed, but instead they have other reserves behind them. So in your interaction with MAS, what do they think about the XSGD stablecoin?
Okay. So to provide some insight into why the US is cracking down on USDC and USDT, first, you need to understand the reason why they are not happy is because they are not having a one-to-one back, right? They have other reserves. What that means is that you are printing money. So the moment you take off the one-to-one pack, what you are doing is basically you're printing more money, right? Because you're issuing out more money, And you think about it, who can do this, right? Only the US government can do this, and they want to be the only one doing this. So how USDC and USDT, what I think they're going to do next is to apply for a banking license. Because actually this thing is not new, Chase Bank, JP Morgan, Goldman Sachs, they are all printing money, right? So what USDC and USDT are doing is not new. It's just that they do not have license. So I think a lot of people have this fear that, hey, USDC, they're being cracked down, in my opinion, US is a capitalist country. Just pay the government money, apply for license, and you can print money as well. It's not new. Goldman Sachs is doing it, JP Morgan. In fact, all the banks that have banking license are printing money. The moment you do fractional lending, it's printing money, right? So yeah, it's actually quite quite a common thing in the US. There's so many banks out there in the US printing money. In fact, the Fed just did some monetary easing. I think the whole US is in this business of printing money. So when I see US cracking down there, I'm like, okay, it's not new. So back to the question. Now that we understand the backstory of that, what does MES think of XRG stablecoin? So for us, we are strictly one-to-one peg. And we are working very closely with MES that, hey, we cannot print money. Print money is the sole discrepancy of the banks and MES. If the day we are print money, then maybe we have a bank license. So basically it's the same. If we want to print money and there's no one to unpack, we would get a bank license. Yeah, there's no two ways about it. If you do anything else, probably I will not be sitting here. I'll be in Changi prison giving this talk. Yeah, it's because it's 100% illegal. And we will not do such things now. So right now, all XRG token is one-to-one, and if it's not so, I will be in trouble. Yeah.
All right. Well, let's hope that doesn't happen. So, why would a business or individual own a coin minted by Xverse compared to, say, other form of currency or fiat currency? Maybe you can do a bit of like pitching on Xverse services here.
Okay. So right now, as I just mentioned in my talk, that to interact in the DeFi world, you need to use stable coins, right? So decentralized application, financial world, right? You need a kind of token that's not fluctuating in price every single second, and that unit of computation is actually known as the stable coin because they are one-to-one pegged to fiat, right? And so why would anyone want alternative, and why we mint our tokens? Because we feel that in this region, and in fact in the future, we do not live in an isolated world that just transacts solely in USD. There exist groups of people and businesses that actually want XRGD. For example, you will not want to be exposed to US dollars interest rate. Your local supplier might not want to receive US dollars later, because there are payrolls to be made, right? So if you're operating a local Singapore business, the chances are you want to have Singapore dollars. And Singapore dollars is the first step by which we are doing. We're actually doing other currency within Southeast Asia. Why we do it is because we think that in the future, if the future is decentralized finance, we're going to see more and more financial applications being built to cater this region, right? And this region, of course, most locals will prefer to hold money in their own currency. They don't want to hold a US dollar currency. And by the way, if you're holding a US dollar currency and US is printing money every single day, some people might actually see it as a form of risk, right? So what we are doing here is we're providing an alternative, right? And we believe there's actually a strong demand for that alternative. And right now, there's not a lot of DeFi world that's actually using XRG, but there is growing. One of the many interesting use cases is basically XRG into US dollars conversion. If you go to Uniswap, for example, or 1inch, and you want to swap US dollars to XRG to US dollars, the conversion rate is way better than Google rates actually. So this is useful if you want to pay your friends in US, etc., or even settle to an overseas business. Instead of using Swift transfer. By the way, Swift transfer, if you've ever done it, it takes 1 week. And in some cases, if you key in the wrong routing number, it takes you 1 month and the money disappears. So if you're doing enterprise financing or like payments, if you key in, you're going to send 50K, right, US dollars, or even 200K US dollars. And the moment you key in the routing bank wrongly, or key in the wrong Swift code, or you don't know what's the Swift code, or even if you key in the intermediary bank address wrongly, your money will just go missing for a month. So what we see is actually there are some enterprises that will convert XRGD to US dollars, USDC, and then settle with counterparties. Yeah. And right now, if you Google USDC, it's actually being used by Visa card. Visa card is actually openly saying that we can accept USDC to settle credit card payments instead of using SWIFT. Yeah, so here are some use cases. There'll be more, as you know, right now this DeFi world is actually still in a very, very intensive stage. In fact, the whole DeFi world exploded last year, late July. It's still a very new space. So I'm not too concerned with it, and looking forward, I do think that this region actually need XSGD, and we want to see Singapore to be the financial hub, right? I mean, if you think about it, past 10 years, everyone is saying that Hong Kong is the financial hub, not Singapore actually. So we want to be Singapore's financial hub moving forward in the next 10 years. And how we can do it, I think this is an opportunity for us. And so we try to launch XSG and try to be aggressive about it. Try to put Singapore back into the world map again in terms of being a world financial service, at least in the Southeast Asia region. Yeah.
Yeah. And to follow up the questions on the question earlier is, are there private, or if I want to use XSGD, are there private or public exchanges that I can go to do that?
Yeah, we are working with some exchanges that will accept XSGD and in return swap out with other currency pairs. Right now, they are in talks with MAS to seek regulation approval on that. So the definition of XSGD, what does it mean on their platform, right? And many of these exchanges are actually applying for licenses and all that. So they are actually in the process of getting approval before listing any new coins. And we are actually actively participating in the conversation with MAS and with the crypto exchanges to kind of talk about it. So right now, not many because of the license application progress, but I would say if you look at a DeFi world and you look at decentralized exchanges, the volume actually outweighs centralized exchanges really. So I would say in 5 years' time, more and more people will go towards decentralized exchanges rather than centralized private exchanges, or even like the standard Coinbase, Binance, even locally CoinHako exchanges. Yeah.
Wonderful. So for the next questions, right? I think the person asking the question has the same idea as I do, and maybe it's a bit layman, but is it possible, right, to block the services that is running by blockchain by blocking their IP addresses? Just worry about the security of that entire system.
So the only way to block a service, it's not possible to block. As in, blockchain by itself cannot block your IP address, because as I mentioned, this is decentralized application, right? So decentralized basically means anyone, including Wayron here, he can set up a server running a blockchain, right? So if I connect to him, I can actually access blockchain services, because everyone will have a copy of a data ledger on their own computer. So there's no single person that says, hey, blockchain or Ethereum, block this IP address. What could possibly happen is that the government, detects and look through all your internet requests and prevents you from actually any broadcasting anything remotely blockchain related. Because you're gonna broadcast a blockchain message, right? You need to be part of the blockchain node, and to do that, you need to communicate with other computers, right? So what the government can possibly do is they look through all your internet packets and filter out, hey, okay, this is Ethereum transactions, I block it. Whether they want to do it, whether they want to run a super powerful global country firewall, is another question. But of course, it's actually very hard to do such a thing. Even in China, the firewall of China, there's so many ways to bypass it. And I mean, if you are a computer science student, bypassing government censorship is actually one of the easiest things you can do. Yeah. So, but I won't go into that. But I would say yes, you can block it for the common users, such that usage will drop drastically to maybe 5% of the world knows how to overcome this. But to block it entirely, no, it's actually very, very hard. Yeah.
So I guess you think that the impetus for government to regulate this entire system is quite low at the moment?
So government, draconian governments that want to block access entirely, I think it's quite few. And even if they want to block it entirely, it's actually pretty hard. Yeah, I would say technology to block everything. I think it takes some time for such a technology to develop. and you need to spend a lot of money to monitor the network, right? To figure out, hey, which of this is the blockchain world. So I would say, I would imagine most government will actually actively work with crypto players, to figure out how can we work together to use this for good, rather than try to censor it, because just will spend too much money, right? And of course, just like in the early days of the internet, right? There are debates on whether the internet is going to be used for good or bad, right? Some people say internet is being used for drugs, child trafficking, whatever, right? Or even illicit activities, online scams. But if we look at it today, actually, there's actually more good done on the internet than the bad, right? So today we're having this online conversation. Not possible if there's no internet. Right? So overall, the net effect of good that can be born out of this technology is actually more than what the bad can do. So I believe most government will try to harness the good part and try to regulate the bad part. There might be some bad guys out there, but we're not going to destroy innovation just because there's some bad eggs there, right? Yeah. So that's the way I think about it.
Right. Talking about security being backed, I think everybody probably have read on the papers recently that there has been hacks on the system and there will be millions of dollars lost. So how safe are the system ultimately?
Okay. So there's a pros and cons in a smart contract world. So because your code is freely open to anyone to read, so if you actually make a mistake, like what I mentioned, there's a bug in line 56, and a hacker spot that bug, he can actually abuse the bug and drain the money inside it. So pros and cons. The cons being that it's open, people can actually hack it, and if you ask how safe it is, there's actually quite a significant amount of risk if you choose to enter the DeFi world. Hence, you can see just now the platform I showed you is paying 6% to even 20% interest rate. So as of all things investment related, if you see something that's giving you a higher interest rate, there must be something behind it, right? There's no way someone will pay you a 10% interest rate when, let's say, ETF is going to give you a 7% to 10% over a 7 years period time frame. So in DeFi world, you can actually see 20%. Sometimes you will see 50%. The more obscure ones, you can see 100% annual interest rate. Why is it so high? Because they're compensating you for the risk involved. So it's a risk and reward ratio, and I would say this is an open market. Right now, there's a lot of people putting their money in the DeFi app. There's also a amount of risk, but there's also rewards. So I would say there's risk for sure, but actually a lot of these DeFi apps are actively being audited by security companies. Of course, if you're the founder of the DeFi app, you wouldn't want your application to get hacked, right? And then all the money, you lose all your users. So a lot of them are actually actively trying to prevent that. No one actually, unless you're a malicious founder, you deploy something with the intention to steal money, that's a separate story. But most of the top 10 DeFi applications on Ethereum, for example, are legit companies out there actively looking at smart contracts and preventing hacks from happening. Yeah. So hope that answered the question. It's basically a risk reward ratio. And there's definitely risk. It's not saying 100. Nothing is no risk, right? Even as I mentioned earlier in the beginning of my slides, I invested in a US bank and they confiscated all my money because I'm not in US. So what's the risk there, right? I would say that the US banks are actually more of a risk than me, or even centralized authorities, centralized bank. The moment they choose to take my money, that's it. At least here, if I put money in the DeFi app, I know that it's being hacked by a hacker, right? No branch manager will have the central authority. So hey, your money's gone, and that's it. There's no way you can appeal.
Yeah, talking about exploiting errors, right, in the codes, right, and I'm sure this happens quite often from time to time. What if erroneous code has been ratified and there's a new reverse transaction being input into the system? What if on the other side they don't accept it? What happens if they don't endorse this new reverse transaction? Is that means that your money is lost, or the transaction is going to be erroneous?
So as in, this refers to the very first question, right? Like, what
Yes.
mistake is it? Oh yeah. So it depends. So if you were to say, hey, I build an application and then I do it wrongly, and let's say I deploy a smart contract, there's a line of code. What I need to do is I'll deploy a new one. Of course, users can choose not to use the new smart contract, right? They can choose to ignore it. But then if you want to use my application, no choice lah. You have to follow me, right? Why will you use a buggy application? Because I actually move all the funds from the buggy one to the non-buggy one, for example. And in certain cases, let's say I accidentally transfer to Wayren $10 coin, then oh shit, I made a mistake. Then in this case, no choice lah. Yeah, so you have to see, certain cases, most of the time it cannot be reversed, right? But if you want to reverse, you need to actually get consensus on why. But most of the time, if it's a legit use case, people will agree lah. For example, if I know Wayren, I accidentally send him money wrongly, he will send it back to me. But of course, he has a choice not to. He can choose not to, send me back the money. Just like, if I made a mistake in the smart contract, I deploy a new one. It's true that people might not accept the new changes, but hey, if you want to use my application, you accept the new one and move on with life, not just use the old buggy one, right? No one's stopping you. Yeah.
Yeah. Is there any confidentiality involved in smart contracts since it's open and accessible to everybody?
Yes, all the data there is openly accessible to anyone, but as you can see, what you see is basically strings of wallet addresses, transferring values to another and executing it. It's anonymous in the sense that the wallet address is running code, broadcasting transactions, transferring value on a blockchain. It's all strings of wallet address, and then you need to figure out who is the person behind the wallet address. The wallet address being quite long, 0x1FBFAD, 16 digits long, etc. You need to figure out who is behind that address, right? And that by that definition is hard. You do not know who. So it's open, but at the same time anonymous, unless you know who owns the wallet.
Right. That's how they keep security. And okay, this is going to be an interesting one, which is about digital yuan. So in China, the central bank is rolling out digital yuan. How do you think Singapore can participate in this? And is it a counter thesis of what decentralized finance is about?
Okay. So to understand CBDC, which is the Chinese yuan, you need to understand also there's usually two kinds of CBDC, right? CBDC meaning central bank deposit currency. There's a retail one and there's the central bank one. I think most people will probably think of it as the retail one, but actually what most people have in mind, at least for the government point of view, is the enterprise one and the between central banking, how they settle among one themselves, right? They're actually thinking more of that, basically the non-retail use case. So in the case of the China CBDC yuan, they're actually thinking more of it from the enterprise point of view. Meaning to say, the only way you can have access to the Chinese yuan is through your WeChat, is through your Alipay. So actually, there's no difference. It's actually, I don't think it's actually the government's aim to allow you to keep Chinese yuan in your own personal trust wallet that's not owned by a company like Alipay or WeChat. Because by doing so, what the government will actually is promoting is basically this intermediary Bank of China, all the TBC Bank, Merchant Bank, basically all the banks that have banking license, they are actually telling the banks, hey, bye, you no longer have a part in this world anymore. So you just imagine one day if MAS decides that, hey, we're going to launch Singapore CBDC, and everyone can just keep a copy in your Trust wallet or Ledger Nano wallet, whatever wallet you want to think of, you can have your own wallet. What will DBS think, right? DBS will think, hey, everyone's going to withdraw money from DBS and keep their own wallet. That would definitely happen, right? Why keep it in DBS? I'll just keep it myself, right? So government would never actually do this, because the moment they do this, they will actually disintermediate all the existing infrastructure that have been built up over the past 20, 30 years. And actually, there's a disadvantage of that. The net effect is that there's going to be less credit lines, less regulation. There'll be more work by MAS to figure out all these regulation issues, right? The reason why right now you have all these banks settling around the retail space is because MAS don't want to kind of like privatize this lah. They want to open it to the public. So you have all network of banks, introducing new financial products to everyone. If the moment MAS or even China release one retail CBDC, immediately the burden fall onto the government to introduce new financial apps to the public. And what that means is just going to create more work for the government. And if the government chooses to do so, well, that's their decision, but I think it's quite unlikely. Yeah, because of there's just too much cons over pros. So most likely going to go through the hybrid model where they launch a CBDC, but only established companies can control the CBDC. So like your WeChat, your Alipay, and in summary, actually no difference to consumers. You're just going to consume it over there. And let's face it, how many person in this world above the age of like 40 know how to interact and broadcast a Bitcoin transaction by themselves? I think very rare, maybe 1%. I don't think my mom knows how to do it. So it's unlikely lah. Yeah. At least not for now. The rest is.
Okay. Wow. I mean, this is a very, very exciting field, and there's still a lot of things that's being developed and being introduced into the market every day. And we're going to go back the discussion to XXGD. I think there are a lot of questions regarding that as well. So maybe you can provide some examples how XXGD has been used in the decentralized finance projects, if you know of any.
So XXGD right now is being used on the Zilliqa network. It's on ZeroSwap. Okay, so actually what some common use cases is that they go to Express, they top it up, and then they withdraw XSD into the Zilliqa network, and then they swap it out for Bitcoin, they swap it out for Ethereum, they swap it out for US dollar coin. So actually there's many use cases out there, but most common use case right now is XSD, swap it out of Zilliqa, and then transmit it to some other exchange of your friends and then convert it into US dollar coins or Bitcoin and Ethereum. Yeah, they might even use Zilliqa as a form of payment. Yeah. The reason for that is because the Zilliqa transaction cost is very, very, very low. It's almost free to send 1 0 to another person. Yeah. So that's one of the use cases for Zilliqa right now. The other use case is on 1inch and Uniswap and DFX. You can actually Google those. Those are known as your liquidity pool. So meaning we can create XGD pairs with any other pairs that you can dream of. So for example, you can create an XGD pair with Google stock pairs. You can create an XGD pair with a USDC pair. You can create an XGD with a Bitcoin pair. So to play with it, you can go to 1inch or Uniswap. I think 1inch lah. I think 1inch is now the most widely used one. So you can go to 1inch, you key in XGD, and then you can type in the corresponding token that you want to buy. So currently, this is the most widely used case right now.
Right, and I mean, Xverse have actually been able to sort of mint this XSGD coin, and it's actually pegged to SGD 1-to-1. So there's a question that's basically asked, why did you choose to peg it to SGD and not another model, or maybe to another algorithm like UST? Or even to collateralize it to a different cryptocurrency. What was the rationale behind the process?
Okay. So we take a look at stablecoin. There's 3 kinds of stablecoin. One is a collateralized stablecoin, i.e., you lock in Bitcoin and you mint a certain amount of stablecoin. I think the question is the question was basically saying like DAI, right? So DAI is one example. You lock in Ethereum and then you mint DAI, which is US dollar stablecoin. Second way is algorithmic stablecoin. So meaning everyone who has the stablecoin, one day you open up your app, hey, how come the value decreased, or someday it increased? So the supply of the stablecoin changes every day in accordance to the demand, right, to maintain a peg. So that's the algorithmic stablecoin. The last one is basically the pegging system, which is what we are doing. So there's 3 types, and we are doing the one that is the pegging system. And the reason why we do that is because we have the MPI license and WSBI license. And for us to do anything else, I think it's harder to get approval from regulators. So we are just riding on to what we have done before in the past, which is we are licensed by the MAS. And we created XRG that is not much different from our licensing scheme and something that is easy for MAS to understand, right? So if I were to launch something like a government stablecoin or launch a collateralized stablecoin on Ethereum, to explain all these things is very, very hard. It's just a lot easier to explain to everyone here that, hey, you give me one XRG, XSGD, I give you back 1 SGD, and we guarantee, right? If let's say we say there's $100 on the blockchain, there's going to be $100 in our bank. Such a mechanism is very, very simple to understand. And I do not have to go into details on collateralization, blockchain, stablecoin, or even like algorithmic stablecoin, and explain the whole mechanism, and everyone's just scratch their head. What is this about? So the fastest way to enter the market is to do something very simple, and actually achieves the same thing. Yeah. So that's the reason why we do it this way. Yeah.
All right. Two questions regarding volatility. So the first question is on whether there's a cap on SSGD in circulation. And the second thing is, how do you guys manage the volatility of prices of XSGD?
Okay. There's no cap in the amount of XSGD that can be circulated in the market. To me, the more the better. That means more usage. More usage basically means it's better for the Singapore financial ecosystem, right? To me, I just want to win Hong Kong, help Singapore to win Hong Kong in the next 5-10 years, in this world of DeFi, decentralized finance. I want to plant Singapore in a map. I want people in the whole world, right? Say, hey, in Southeast Asia, we talk about the future of finance. Singapore is actually the financial hub. So there's no limit in terms of the SGD circulation. And then, what's the next question?
How do you manage the price volatility?
Okay, so there's no price volatility because it's a stable coin, hence the word is stable, meaning to say that 1 XGD will always be 1 Singapore dollars. It's not because you think about it, Bitcoin, right? 1 Bitcoin is equal to something. That something will be US dollars, more dollars, and the price change. But hey, we are pegging 1 SGD to 1 SGD. So there's no fluctuation. But if you compare 1 SGD to 1 USD, does the amount fluctuate? Yes, it fluctuates, but not a lot. But to a holder of SGD, it doesn't matter because no matter what, we're just going to give you back 1 SGD. So yeah, we do not need to control the fluctuations or anything. Yeah.
Right. Maybe one final question on SGD. Again, is it going to be available, or do you have plans for it to be available on BSC, which I assume is the Binance Smart Chain?
Yes, yeah. So Binance Smart Chain refers to BSC. Whether we have plans or not depends on CZ. So for us to invest time into launching XGD on BSC, it takes time and money. So there are actually plans for that, but actually it's not yet in concrete. We are still trying to figure it out whether we want to invest time on it. Most likely, if BSC were to provide us with a grant, or if anyone knows of someone from Binance, definitely happy to have a chat, and we can figure out how can we launch XGD there, because we are talking about at least 2 engineers working on it, launching it, maintaining it. So there are salaries to be paid. And so if Binance is interested in such a project, we can talk. Yeah.
All right. So the next part is really about what are the trends and what are the things that's happening in the blockchain world. And so this first question is the success of the Ethereum blockchain today primarily because it is the incumbent platform or ecosystem? And the second part of the question is that what is the likelihood of the platform developed by NUS to take over the Ethereum blockchain, since it has a lot of similarities between the two platforms?
Okay, wait, can you repeat the first question? I didn't quite catch the first question. Okay,
the first question is, what is the popularity of Ethereum is due to its incumbent status?
Okay. Okay. Yeah. Yes, I would say. I mean, it's a first mover advantage, I would say. So Bitcoin and Ethereum, as mentioned in my early slides, they're one of the 2 most popular ones, is because they are the world first, right? So Bitcoin being a first blockchain that can transmit value, but it has one limitation. The limitation being it cannot do anything else but transmit Bitcoin to one another. Right? Of course, it can store the value, it has all these properties, but the only thing it can do with it is just send Bitcoin to one another, right? However, with Ethereum, which is the next major blockchain that released after Bitcoin, is able to execute Turing complete code, meaning to say whatever your servers can do and your computer can do, Ethereum can do as well. So it's an open platform that literally can write any application code on it. And so yes, the success of it is because of the incoming platform. And number 2 is actually, I think most people will not understand in detail, right, the difference between like Ethereum and let's say Binance Smart Chain. So in Ethereum blockchain, for example, literally anyone can run a node, download the whole Ethereum blockchain history, and join the network. But in Binance Smart Chain, we try. It's actually a blockchain, it's actually a DeFi platform, but actually you realize that, hey, it's not so open. It's open in the sense that anyone can freely access Binance Smart Chain and interact with it, but to join as a node, to join as a validator, is actually not possible. You need to have approval from the Binance Smart Chain folks. Yeah, you can try Googling how to join the Binance Smart Chain as a validator, as a node operator. Currently, right now, it's operated by 14 nodes that's being selected by the BSC community. So yeah, there's a part where I think most people don't understand. There's actually the blockchain world, which is free accessible to everyone, but the architecture of it is different, right? In the BSC world, it's not entirely open. And so there's less trust into it. So today, if you search in Google, BSC versus Ethereum in terms of total value locked, Ethereum will always be more. And actually, there will be a lot more people trusting the Ethereum blockchain because it's truly open. But Binance is, half-half, it's open in the sense that everyone can access it, but actually to join as a node, you need approval. So that's the reason why Ethereum is still the number one. Second question is the platform developed by NUS taking over Ethereum blockchain. I think it will take some time because first mover will always get the first advantage, right? It's just like Facebook. I think the way I rephrase is what is the likelihood that someone release a platform developed by NUS taking over Facebook? It's likely, but to do it takes a lot of money, it takes a lot of time, and maybe your younger generations, right? For example, Instagram nearly took over Facebook, but Facebook bought it over. Yeah. So I actually do not know. Right now, they're actually fighting an incumbent that has grown so big and with lots of existing users. But I don't think it's not possible. In the technology world, we can see technology actually takes away the old incumbent very rapidly just because of certain paradigm shifts. So the likelihood, yes, is definitely there. So it's possible that the Zilliqa network can take over the Ethereum blockchain. But it will take some effort, maybe some paradigm shift. And maybe a new generation of users just decided, hey, Ethereum network is just too slow, and then overnight, other blockchains will have the chance to shine. Yeah.
Right. I have a last set of questions. I can't imagine we have been answering questions for 45 minutes. But last set of questions is really dealing with Xverse. I think there are a lot of people who want to run their own version of Xverse now, and they're very, very interested in the model that you have. Maybe the first question might be an easier one. So one of the attendees asked, is Xverse considered a central authority since you are issuing stablecoin? If you are a stablecoin provider, and does this go against the intention of decentralized finance?
Okay. So to understand this question, so what we are doing here is we are actually, you can think of us as the bridge from the CeFi world to the DeFi world. Ultimately, there needs to be a bridge, right? If not, how would you put US dollars into DeFi? How would you put Singapore dollars into DeFi? It's just simply not possible. So would you consider a bridge a centralized authority? I guess yes, since we are the bridge, right? And since we are the approval in our minter. But what do we do after that? Actually, we don't really care and we can't care, right? So once you mint the XRD, you can send it around, send it to anywhere, build your own applications to accept XRD. All this we cannot control because it's on the blockchain, you own it. So we cannot control how you send XRD, where you send it to, how you use it. And so all this we don't have control once in a DeFi space. So in some sense, yes, centralized authority, but after you mint it, yeah, it's completely in the DeFi world already. So hopefully that is that's something we can understand. Yeah. So it doesn't go against the intention because we are the bridge.
Right. And this is one question that came out quite often because you mentioned that the 1x XGD is pegged to one Singapore dollar. So is there profit to be made? It seems that it is a one-to-one transaction.
Yeah. Based on our licensing regime, we are by law required to have a one-to-one peg. It's audited. It's audited by third party. And who audits us? The government, actually. Yeah.
Well, so basically charity lah.
Yeah.
Okay. So you work very closely with the MAS and the authority. So what are your thoughts about CBDC fintech ecosystem? That do you think MAS will be participating in that in the future? And if Xverse will be one of the people who will be participating in this space, and how do you think you'll be participating?
So I think not too long ago, MAS launched a CBDC mini competition on submission of ideas on how CBDC could be operated and be used in Singapore. And so we actually submitted one of our entries over there. And we cannot reveal like the details on what we have submitted, but we're definitely looking forward to work closely with MAS and even the industry players to figure out how could MAS actually, work with CBDC, or should they, how do the manner which we launch CBDC, or even should they or should not? Definitely, we are actually submitting our entry into it. MAS is actually looking at industry players and figuring out what's the next step.
Right. And one question we have is on NFT, which I think you spoke briefly about. Plans for Xverse to be involved in this in the NFT space?
So we are actually fully occupied with maintaining XRGD. So for us to get into the NFT space is unlikely. And actually, if you understand NFTs, you must also understand that NFTs represents something of value that people want to keep and is unique, right? I don't think I'm very creative, to produce something so nice that people want to buy and pay $1 million for artwork that I produce, either artwork or music pieces or something that is worth keeping. That's not my forte. I'm just an engineer, so I do not know anything about arts. So it's unlikely that me or our company would launch something related to NFTs. But however, you can actually take a SRD and actually create your own applications. Maybe you're artist, you're thinking about NFTs. You can actually launch your NFTs, and sell it to the Singapore market, and in return you collect SRD. So yeah, this could be a startup idea actually. Just create your own NFTs for the local region in Singapore, at least, for local sellers, marketplace makers, or even stock photos, artists, etc. Be a platform for them, and they can put their artwork onto NFT platform that you built, collect XRGD, and yeah, you can start a new ecosystem primarily for the Singapore market or even for the Southeast Asian market.
Yeah, I mean, this is a very new technology, a lot of innovation coming up. And I think a lot of ecosystem are in its nascent stage. So they are already garnering a lot of interest. So what do you think? What does the future hold for you? What do you think, in a quick few words, what do you think is going to happen in like 5 years' time? Any predictions?
Okay. So if you look at the open source drive over the past 20 years, right? Open source basically means source code that's open, and the adoption rate that's being uptaken by this open source community of people. One example that I think everyone knows is Android. Android source code is open source, and that's also the primary reason why you can see more mobile phones running Android as opposed to iOS. And iOS is a closed system, right? So if you just understand what open source means and actually the concept of being open and the rate of innovation that it can derive from it, just by looking at Android and iOS, you can realize that actually, hey, the amount of innovation that Android has is 10 times faster than what iOS has, simply because it's open source. Anyone can contribute new innovations into it. You have Android TVs, Android smart devices, Android whatever, right? Because you do not have to pay Google money just to access the source code. Google actually opens up source code for anyone to use. Same as operating systems. Actually, Apple was developed from Linux kernel, which is open source, and hence they actually run Apple. So actually, you can actually see that by sharing source code, sharing proprietary work, it actually leads to more innovation and more compounding effect down the road. So if I were to take a guess, decentralized finance is definitely going to have a rate of innovation way higher and faster than centralized finance could ever dream of. Just by looking at historical use cases, just by looking at how many people can actually contribute and change the world. It's a lot more than what a centralized authority or centralized figure can actually do. So I'm actually very hopeful that in 5-10 years time, I'll definitely think DeFi is going to take over CeFi. Yeah. But it will not replace DeFi. We're just going to work hand in hand in tandem, and just that more applications, a lot more applications and more use cases, and more people are going to use DeFi apps, right, in one form or another, either through your mobile phone, someone build an interface to DeFi world, yeah, or someone just interact with DeFi directly. But I would say the backbone of how finance transaction will take place is going to be rapidly more towards the decentralized finance world.
Wonderful. Thank you very much, Victor, for answering so many questions. We recorded more than 30 over questions that we have answered. For the remaining of the time, I'll pass it back to Royston.
Thank you very much, Victor, for sharing your insights and expertise to decentralizing finance, and of course to Weiren for moderating the Q&A. So once again, a big thank you to everyone for joining us tonight for Tech Talk organized by NUS Alumni Relations. So do stay tuned to our alumni website and social media channels for more upcoming events. So we will be closing this webinar in 5 minutes. Once again.